Hello guys, glad to have you on board again today. I'm going to go real quick. I'm still coughing a lot, so therefore I need to save some energy for my throat to recover. Don't worry, I'm doing fine. It's just like talking too much just make things longer to get healthy. So anyway, plenty of things to talk about today. That's the big problem actually. I wish I could talk a lot more, but I just don't want to or cannot. So here it is, okay? Two things to talk about today, stock market and cryptocurrencies. So for the stock market, we're dealing with a potential third range boundary area. So big question mark on whether or not they will actively work, okay? So we're definitely out there. The first to second range boundary has been real fast and impulsive. The second to third range boundary has been done in two sets of waves, has actually such a low volatility that the higher time frame, the H1 time frame in here, is getting squeezed in price volatility. That's the reason why it is a context that gets so much fucking complicated for you to deal with. This is definitely not the type of context in which you want to heavily sell and stuff like that. So it really gets unconventional, but we're definitely dealing with the Fibonacci cluster. We've tried to accelerate, so there are some definitely definitely good signals to go against this thing and to actually get to be a neutral bearish out there, not being too much bearish, not being too much bullish, just I think neutral bearish, because we are looking for third range boundary areas. So this is the challenge for the day, because those signals have been reached out to with a very stupid another vaccine stuff, huge volatility, and therefore the signals that have been triggered are just taking profits. Same thing goes for the 15-minute chart time frame, really not that great types of signals. But in terms of strength, it's really like the first to second range boundary was a lot stronger than the second one. And in here, I really think that we could have a huge drop in price, probably looking at this, okay, something like that, or something more contrasted and in which we're going to get to build a triangle, possibly looking like that, okay? So I goddamn don't know, but all I know is I'm definitely not bullish out there, okay? It's more about profit taking, and even though it looks bullish, I think it's more about profit taking for the bulls. But if you want to get to trade this third range boundary, the underlying context, definitely not great. So that doesn't mean you can't get in. I definitely think it's worth getting in, but the question is how much? How aggressive? I think that looking at the signals we have, getting in totally made sense yesterday, but not that much. It wasn't worth it like half a normal leverage. On third range boundary, you know that you must never risk more than 1.5–2% capital. So I definitely stand for this. Today, if you get into this third range boundary, or yesterday if you did, you really must be lower than 1% risk taking. It's definitely halfway through the normal conditions, because the signals quality and the context we're living into right now is pretty fucking mixed. Though that's the thing, okay? If you want to get in, it totally makes sense. And if you did yesterday on these neutral mixed signals, then god damn it, you did well. It really was worth it. And I'm glad if you saw this third range boundary opportunity. But the message for today is that whether you traded it yesterday or not, or if you really want to catch up on this today, which is probably possible, you need to be aware that this is not the type of trades in which you want to make money. So I think for those who have bullish portfolios, this could be option for cover trades. The thing is that I'm already covered, so I'm personally not going to do it. I think my current stand in the market is just, well, 50% covered, which means I'm not totally all into the upside, because I really don't feel like it's the most likely thing to come, but I'm not necessarily bearish either, because it doesn't really feel that way. Okay, so bear that in mind. What we need to look at today is the probability of this cycle to be broken, and if that's the case, then of course you don't fight against this, okay? But the most appropriate stuff, I think, is just a tiny, teeny little boring pullback today. Not breaking, but not going significantly to the downside. Pretty much just questioning yesterday's trading session. And I think oscillating across this big level, which is our weekly trend line, the reference point for our analysis. Have a look at the weekly briefing, of course, if you don't know what I'm talking about. The second thing that really leads me to this conclusion is the fact that tomorrow we're going to get the close of VIX expirative contracts. We're still dealing with positive moving average, and in here, of course, we could have some rebounds, but I doubt we can go real further away from the actual prices because, of course, every fucking month we want to close these volatility derivative contracts at the lowest possible level. So we're gonna try concentrating volatility to be and to remain as low as possible till tomorrow midday, in which we'll get to close these contracts and get a new expiration. Okay. So that's the thing right now. I think after tomorrow we can eventually have a burst of volatility or at least a rebound. But until then, it's really all about this. And yes, it sounds real stupid, but that's the world we live in. So unless we get some huge external impactful catalyst, I think the only catalyst we're experiencing at the moment is the volatility derivative contracts reaching out expiration tomorrow. Okay, regarding cryptocurrencies then, crypto markets doing well. We're getting Bitcoin in here facing resistance because that is the higher time frames context and we're on the verge to get above it. So this is going to be a hugely resistance area. We've reached out all the footprints I have printed on this market. So this is not about time to be extremely bullish out there. Look at the signal. We're getting overbought and overbought and overbought. This is not nearly something you want to be extremely bearish either. So I think right now in more of a neutral stance and getting into shorter time frames to try figuring out some underlying signals and price structures is definitely what needs to be done. Just like we stated, of course, yesterday in the weekly update as well, I hope you've seen it, then it is that as long as we don't go bearish, there's no reason to be bearish. We're still facing higher and high points and we've looked at the trend lines as expected. So we're dealing with this area and the signals we have are overbought clusters. So this is not the area in which you really want to get to buy because I think this is really have gone overbought at the point. But as long as the trend lines are holding on, we must take care of the probability of prices looking at the upside area of this trend channel and eventually get to break on top of it. This is the 18K area. I doubt we can get there because I think as long as we remain trading this trend line, there is a probability for third range boundary in here, but this one was real quick. That means that we have at the moment two aligned third range boundary and converging trend line, meaning that if we were to build another third range boundary in here, that means we need to reverse the context. But if we were building another third range boundary pretty much aligned with the previous one, that means not great at all. Okay? And in that perspective, experienced traders, that's the reason why I stamped this video as a green level and also orange level, because this is for experienced traders only. This pattern is a little bit more complicated than just that, but we're gonna have a speculative area in here on the third possible aligned third range boundary with converging trend lines. And if we do have such a thing, I think that if the signal validates, we're going to have to risk manage and profit take some of our coins or cover partially the portfolio with derivative contracts. Okay, so for those who look for cover trades in Bitcoins, only those who have bullish exposition to this market. It's not about short selling Bitcoins anymore. I hope you understood that. Just like for the stock market, it's not about short selling either. I hope you do understand what that thing is. We were looking at drops in prices for the latest 2 to 3 years. We've had these. It's not about time to be net bearish right now. It's about time to think about covering portfolios. Sometimes, eventually, short-term bearish exposition, but only for experienced traders, of course, okay? Don't be dumb bearish right now that the market is going bullish. Just don't be stupid enough to fight it, okay? I hope you understand that. But still, that doesn't mean you need to be all in at each and every time. Exposition to a market is just like risk. It's nothing like being constant. It's always oscillating, increasing, decreasing, and we need to switch as well and to adapt. That's the thing we do. We go more in, we add money to this market, or we pull it off, we profit take, or we cover. That's how we do things as professionals, okay? So that being said, that's the thing. What I'm curious about is still the BTC dominance. Still have no answer at that point. We've tried to break the third range boundary, and that's a nice failure, which means we might still be looking at it. We still might be making the third range boundary. We'll see all about it, okay? But we're still dealing with the negative, with the resistance area, speculative area. Whatever happens out there makes sense, but I don't know what that's going to be. Either we're going to massively break out of this, or like we said, just going to keep on failing, and and we're going to have to break the moving average. And in that perspective, as Bitcoin might be reaching tipping top area, exactly what we've stated in the weekly plan, then we might have some interesting stuff to come over on altcoins. And therefore, this is why I think we need to have a look at these guys. I think Bitcoin is getting topish, but I doubt this is going to happen with the cryptocurrencies and with the rest of cryptocurrencies. Okay, and here we have a beautiful overlapping structure and stuff like that. So things could show up out there. I'm just mostly willing to see this. So I'm waiting for the appropriate timing for this market to show some strength. Until then, I'm not getting overexcited. Okay, we're drifting with the resistant context out there. As you can see, Bitcoin has totally fucked its own. So is there a probability for cryptocurrencies, for altcoins to get to fuck their resistant context just like Bitcoin did a few weeks ago? I think yes, there is this opportunity of a delayed action in prices for these. So what I'm getting to be concerned about in terms of Ethereum is the fact that this week the 4-hour context has been updated and it is confirming to be on top of the previous market top. So if we were really looking at this area, I'm really going to be interested on whether this will be, oh man, we try and we're not making it, or we really try and bam, this really fucks it all up. Like we said, this is mostly what's going to be driving the BTC dominance next week. I don't have the answers. All I know is that I'm still favorable for a breakout. I've been for multiple weeks and months. That's the reason I have a long-term exposition portfolio to Ethereum. I just don't know where and when. I don't know if it's going to break, but I significantly think of it as very likely. I just don't know when. So that's the reason why it could be tomorrow, it could be 2 years from now, but I'm definitely confident that Ethereum will be worth more than that in the future. Okay, that being said, I think I'm going to leave you guys with that. Have a nice and pleasant day. Be safe. Okay, it's not about time to be heavily invested into the stock market right now. Most likely just being neutral, I think, is the appropriate stance. Bye, guys.